Welcome back, guys, to another roundtable. My name is Adam. I have Rusmin.
Hello.
Victor.
Hi, everyone.
Thank you so much for joining us. Today, we're going to talk about China. An update on China and what's happening there, and of course Chinese tech. I think this is something that a lot of you have asked about in the comments, and China is a big market. And when last year we kind of covered China here and there, things weren't looking so good. I mean, there was a lot of regulation from the government. There was a China Evergrande crisis as well.
COVID.
Yeah, and China wasn't open for business, so everything was looking really bad.
Yeah,
so,
then there's also a report that said they are uninvestable.
Uninvestable, yeah, that was a big
Yes.
word as well from JP Morgan.
Yeah.
So, stuff like that was really, really, was a lot of bad news in China.
Yeah.
And now things are maybe looking a bit different. So we're going to cover, what's happening in China and, what we can expect moving forward as well. So maybe just, where is China right now?
I think the first thing that everyone look at is the GDP, right? So if you look at GDP for China last year, they actually targeted to hit 5.5% GDP growth, right? But they only managed to grow at 3%. And that was largely due to the zero COVID policy, and they're dealing with Omicron, which are highly transmissible, and then they decided to abandon that strategy. And of course, this year we are hearing a good news, and where China is opening up, and now they set the target to hit the GDP at about 5%. So I think they are pretty much on track there, right? It probably won't be as bad as compared to last year, because there was so much negativity last year, right? Especially you have here China Evergrande crisis, and there was the time the crisis. I remember that they deemed it as the next lemon moment, right? Where it can be quite catastrophic, and it can be a big, huge crisis that affect the world, right? So, and because China Evergrande, of course, they failed the 3 red lines that the Chinese regulator actually implemented. Basically, they are overly leveraged, and because of that, they got into liquidity issue, and then millions of homes were not delivered. All right, of course, this year and late last year, government have been trying to work with them to deliver those homes, but looking at the last one here, I mean, how things have panned out, it wasn't a lemon moment, right? It wasn't as bad as what we expect. I mean, we did a discussion on the roundtable previously, so we didn't expect a next lemon moment, all right, for the Chinese market. Because if you look at the recent opening up, in terms of Chinese market, the property housing market actually is rebounding quite strongly. Okay, so that is the trend that I think we are seeing is reversing. But of course, the underlying issue related to those heavily geared property developers are still now there's still a problem there. So they're actually working on those issues and start restructuring some of the loans there. Okay, and if you look at the last year, I think mainly where we cover is actually the Chinese tech, right? And there were a lot of bad news. It first started off with Ant Group, right? It was suspended, the IPO, and that started the whole stretch of regulation that start to kick in, right? And then subsequently, of course, you have edutech companies that got demolished.
Yeah,
over
wiped off,
right?
The
and
face
today,
of the earth.
So, and that was when people started to think that Chinese government can do whatever they want, right? And in private businesses now have to be afraid, because one day, the next day when they wake up, the business may be gone, right? And
so
of
that's
course,
the first phase of share dumping for Chinese stocks.
A lot of Chinese stock, and then since then the share price, a lot of Chinese companies started to crash, and then along the way you hear Alibaba got fined 2.8 billion, because of the anti-monopoly rules. They breached that, and of course Meituan also got fined, right? And there was a lot of bad news, and then you have TT app got suspended, if you guys still remember, and they were not allowed to sign up new users. Okay, and of course subsequently you see Tencent gaming business got also the game new licenses, they are actually being suspended because media actually says that they are being labeled as spiritual opium, all right, which is a very strong word at that point of time. And now that basically the whole lot of last year was very intense if you invest in Chinese tech, right? And because of that, you see the whole sector of Hang Seng Tech ETF down about 66%, and then it got worse late of last year when Xi Jinping re-elected again as a president of China, which is kind of expected, but things really got the
market just didn't like that, right?
Didn't like that. And of course, you still remember there was also a lot of ADR delisting threat on Chinese company, or rather foreign companies, right? If US government PBOC cannot get access to the audit file, this company may get delisted from the US stock exchange. And that's where people started to say that, China is uninvestable. People start dumping the share, and then some of them, they want to invest in China, they go straight into a Hong Kong market to buy those Hong Kong shares. Okay, and things just got worse when Xi Jinping started to say about common prosperity, and then people started to believe that the day where profitable companies like Chinese tech will be gone, right? And
because Alibaba and Tencent, I think they want to donate 15 billion to the Chinese government.
And they are playing their roles to support the country goals, like, which every company usually have to do if you are in China, right? But that those negativity was at the peak, right? And that's where we saw JP Morgan reports coming out. Right, and of course today, as you look back this year, things are being unwinded. You get to see, you don't really hear big fines like Alibaba or Meituan. Probably moving forward, there will still be smaller fines along here and there if they breach certain things that didn't pass the regulator criteria. And of course you also see gaming licenses are now being issued. Even the foreign imported games are being issued out, not just to Tencent but to all those companies like NetEase and other smaller gaming companies in China. And of course TT app now is being resumed back. They can sign up new users after they pass the cybersecurity tests and all that stuff. So, and of course most importantly, now the PCAOB get access to the audit file of Chinese companies. Alright, so the investigation is still going. That doesn't mean that Chinese companies are free from fraud, right? So basically now we get to hear a lot of positivity surrounding the Chinese market, and particularly with the Chinese tech earlier this year and even until today.
So basically the messaging has entirely changed this year.
Yes.
Regarding Chinese companies and all, and that has come from the government level as well.
Yes, the regulator. In fact, when last year when a lot of people thought that private businesses would no longer be as relevant in the future because of China turning inward, now is actually we are seeing the officials are coming out repeatedly saying that we support private businesses and we want to basically grow them, right? And that has been the case, right? They have been Premier Li, he has been very supportive in opening up the China market and the reform. So that has been the case. And of course, when Ant Group IPO got suspended because of everybody started to blame Jack Ma for saying things that he shouldn't say, right? And then after the IPO saga, he disappeared. And now Jack Ma is back. Everyone is talking about China, and everyone is very happy that Jack Ma is back because it's a sign that the government are actually supporting private businesses. And whether you like it or not, Jack Ma is still the role model in China when it comes to entrepreneurship, right? So I mean, you hear his story is also pretty impressive, right? How he ended up become a richest man in China at one point, right? So that was before the crash or all this thing, right?
still very rich man though.
Yes. And of course, recently, of course, we hear Alibaba, going to split out into 6 business units, and each of them will be run independently in the future, right? And that sparked the rally of the entire sector. But even with that rally, I think we are looking at the Hang Seng Tech Index at today's recording, it is still down 61%.
Okay, so could you say, would you say that the Chinese tech have recovered, or is still not yet there? Despite all the good news this year,
it technically has recovered from the low late of last year, because it was down 71% at one stage when the political handover at that time, right? And now it has rebounded. I think it was up 30, 40 to 50%. Earlier this year there was a quick rebound, and then it softened again. And recently, I think we are seeing more rally, especially after the Alibaba announcement. But it's still down 61%.
Okay.
Yeah.
All right.
And if you look at share price of Alibaba and Tencent, if you measure from the peak, Tencent is still down almost 50%. And then Alibaba is still down about close to 68%.
All right. But this is based on share price.
Share price.
Yeah. Share prices can move up and down. I think the main question as investors, if you're looking at the fundamentals, is whether the business has changed.
Yes.
Whether the fundamentals are still intact, whether they're still, very profitable companies, or they're still dominant in their fields.
Yeah. So for that, I think if you look at the things that have changed before the regulation, after the regulation, and you look at the numbers that Tencent and Alibaba reports to you, they are still largely the same. Of course, you have some units that come down, some units that do well, some units that didn't do well. But if you look at the Tencent, they are still in the gaming business, those domestic games. Of course, if you compare to the year FY 2020 when the reported is down about 4%, but that was comparing with the year where 2021 we saw a good year and 2022 was a terrible year in China, right? But it was a drop of 4% for their gaming side business. Of course, Tencent is more than just gaming, right? They do have their online ads, which also suffered last year, okay, down about 7% on the full year basis. And they also have other businesses like their fintech and business services, right? So those part, generally overall, if you look at the whole revenue, it was down 1%.
Okay, so just flat.
Flat, yeah. So it was flat. But if you look at their IFRS net profit, okay, operating profit, they're actually down about 4%. Okay. So, and most of their businesses are still there, right? Even after the regulation. Of course, those nitty-gritty stuff, the operational level, cybersecurity, data leakage and all that, they have tightened up, okay, and they were fined by a small amount. Okay, Alibaba got hit harder, okay, but those days, those regulations never really affect them that much. Of course, it does affect their growth, okay, because of the new gaming license that was suspended last year, so they couldn't actually grow it. Yeah.
Okay.
So that's for Tencent, okay, and if you look at Alibaba, okay, if you look at their business, their core business is your Taobao, right, Tmall, right, and that's actually under their China commerce side, okay. So if you look at year-to-year comparison, that business also has declined a little bit, right. So I think single-digit region, okay. But if you look at the they do have an international commerce like Lazada, and they do have a cloud China, which is their logistic arm, and local consumer services, which is the food delivery side of their business in China. And of course, if you look at the consolidated basis, revenue basically up for Alibaba, okay, but their adjusted EBITDA is actually down by single digit, okay. So if you look at Tencent, the two biggest tech in China, actually their performance for full year 2022 is not that bad. I mean, they held up quite well in an environment where it was so challenging, right? They have this strict zero COVID policy in China. There were multiple lockdowns, right, in early April, May, and then late of last year was terrible, okay, and they delivered this kind of result, okay, and yet their share price crashed by 70-80% at one stage. But now they are still down, but they are recovering.
All right. So what you're saying is, despite all the bad news, all the regulation, all the doom and gloom, zero COVID, basically, you can't really do business, right?
Yeah.
They still gave that a pretty decent performance in your opinion. It was like flat. But then now it's like, what you're saying is that the moats are still intact.
Yes.
They're still the big boys in the company. The businesses are still there. It's still running. Yeah. They still have a captive audience and everything.
Yeah. So again, if you go to China, you can't live without WeChat, right? And of course, you also will shop on Taobao. So these are the products that you were going to use.
So they haven't gone away anyway.
So I think to give a better perspective is if you were to look at Alibaba right now, the price is very close to the IPO price.
Okay.
But since IPO until now, their cash flow has actually grown 6 times.
Okay, so you could say the business has grown 6 times.
Yeah.
But it's still the same price.
It's still the same price.
In terms of the share price,
They have grown bigger.
So valuation multiple have compressed significantly. And that was mainly due to the last year where there was intense bad news that were affecting the market, and a lot of foreign funds are actually pulling out of China because of this uninvestable kind of situation.
Yeah, in fact, if you look at Alibaba's TTM trailing 12 months result, their cash flow is actually slightly higher than the full year of their 2022. Right?
Okay.
I mean, their TTM 2023 is actually their 2022, but it's higher than the 2021, right? It's like they've grown up. I think a lot of the Chinese techs, they also try to, like the US tech, they also cut down on the expenses and all this, right?
So they did a lot of rationalizations last year. They lay off employees, which is what we are seeing with a lot of US tech as well. And now they are a lot leaner in terms of structure. And they cut off a lot of unsustainable business where they give out a lot of incentives, especially like their group buying and stuff like that. And that has been more rationalized. So they're now focusing more on quality growth, right? Profitable growth. Those non-profitable business, like in the case of their cloud business for Tencent, they are also cutting it off, right? They just want to focus on those profitable business. But of course, competitions are growing. Of course, if you look at TikTok or Douyin in version of Chinese version. Of course, that competition is coming in. Markets are getting more crowded, and people are nowadays also short on Douyin, right, to do their live stream and then and then those short video type of commerce, right. So those will affect the competition landscape. Okay, but largely, even with that competition, these two giants are still holding up quite well despite the tough year that we actually see.
Basically, they are not sitting still. They are doing something to fight off the Douyin.
Yeah, I think what's interesting for me is that I mean we went through the worst of Chinese news news, everything was really, like I said, doom and gloom. But it's just surprising to me, like within, now is 2023, it's a new year, the narrative has just completely changed. It's just shifted entirely. I mean, you guys read a lot of Chinese news, right? Following the companies and all that. What is your take of the news right now? Is this entirely just more positive and everything?
It's more positive, and but the share price are not catching up as fast as the news that are flowing in China. Okay, and largely also because of the Chinese and US politics. Where you will see the tension still there, and of course you have this balloon saga.
The weather balloon and all that stuff. I mean, yes, I think the US Chinese. Is the relationship is a bit messy at this point in time, but that doesn't really affect Alibaba or Tencent anyway, right?
No, and of course with the also recently I think we saw TikTok, right? The CEO actually flew to US, and they're going to potentially ban the app. Okay, so that tension is still mainly boils down to the politics. So I think as long as this tensions don't ease off, there are some people will still be very skeptical towards
but
Chinese
even if
companies.
they can ban TikTok because TikTok does have presence in the US that will hurt TikTok. I mean the bans could come in other ways and all that. Maybe we'll cover that in another roundtable. But in terms of Alibaba and Tencent, most of the business is in China. They don't rely on the US market that much, right?
No, I mean Tencent do have some international gaming business, but again, if you look at the whole business group itself, that is still a small part of the business. Right? So about the business revenue actually comes from China, especially if you look at Alibaba. I think almost 100%. Or I won't say 100% because they also have their cloud business in Asia. They're expanding out. They also do their international business like Lazada, right? And so those about it, I would say, right, is still in China.
All right. So if I mean now the narrative has just changed. Even the leadership, the Chinese leadership is saying that we're going to support these businesses. We're going to look for economic growth, end of zero COVID and all that. Things are looking up. Right. So what do you think? What do you think this is going to look for? Like, what's it going to look like for the Chinese tech in the next 1 year or so?
I would love to say that to the moon, right? But in investing, you would say cautiously optimistic. That's what the management will always tell you, right? Because there's always unforeseen circumstances that could happen. Right. COVID is one of those examples. But if things are going as per normal and the opening up continues and the politics doesn't change that much. I mean, within the China itself, China market is looking on the brighter side, because if you were to start to see these companies report their result, and you compare to last year, which is a terrible year, and this year will looks a lot brighter because the growth will be there. And last year they didn't do well because of the huge.
But of course, the better comparison will be eventually to compare them to the pre-regulation and pre-COVID results.
I think this year will be a very exciting year as they open up and all this. Like Chinese, they are able to travel out, and recently they also announced that they fully allow all the foreigners to actually come into the China. Before that was like certain visa only, right?
I was overseas and I saw Chinese tourists. Here and there, so they're everywhere.
I think we can see how this year the result will change and see it seems like a more positive side, because you talk to anybody or talk to someone that has been to China, they say everything's like sort of like catching up back to normal and all this.
I think the lesson for me here is that the narrative and the perspective can just change almost overnight. And it's just very easy to get carried away by the bad news. And now it's easy to get carried away by the good news as well. If you just don't ground yourself with the fundamentals of what you're investing in, which is, in the case of Alibaba and Tencent, they're still just very dominant companies in their industries. And that hasn't changed at all.
So I would expect them this year to do relatively better as compared to last year. But at the end of the day, whether the share price will recover really depends on
the fundamental.
Whether the fundamental, whether the companies can deliver that result, that what we believe that these companies are really solid. They have a very strong moat and strong clientele. So basically the Chinese consumer market.
And the sentiment has shifted. Has shifted. All right. So I hope that was a pretty good wrap up of the Chinese tech scene. What's happening over there? Anything else you want to share, guys?
Of course, like I said, there could be worst case situation like sanction, where what US did with Russia, they could do that to China, right? Those are the things where I would say I'm
that's not in anyone's control. These
so
things.
Again, there's always a risk, even though we are bullish on Chinese tech this year. So you need to bear that in mind and make sure you diversify your portfolio if you are planning to invest.
So if any investment, there's no recommendation to buy or sell. And regardless whether it's China or the US or anything that you buy, you got to be comfortable with the risks of any investment, because then that's what you are okay with. If not, you just avoid it altogether. So I think that was a pretty good wrap up of what's happening in China and Chinese tech at this point. Okay, so my name is Adam. That is Ruthman. Victor.
Thank you.
Thank you so much for joining us. Any questions about China, Chinese tech, put them in the comment section. Any suggestions you want us to talk about, put them in the comment section as well. If you like this roundtable, please hit the like button. Also, it's always good to tell us that we're doing a good job. And of course, subscribe to our channel. Many more roundtables coming up, and we'll love to see you again.